The unexpected decline of the US dollar, a tremor at the heart of the global economy. Today, we're tackling a topic that has sent a major shockwave through the heart of the global economy. The unexpected decline of the American dollar. Once considered the world's most stable currency, the dollar has been in what seems like a free fall in recent months. Is this just a temporary fluctuation? Or a harbinger of a much larger shift in the global financial system? The answers might surprise you. To make sure you don't miss these critical developments, don't forget to like the video and subscribe to the channel. Your support enables us to conduct more in-depth analyses like this. Thanks in advance. Why is the dollar falling? The real reasons behind the scenes. The American dollar has been on a downward trend since January 2025. This marks its biggest decline in 3 months and raises a single question: why? The reasons behind this fall are not just economic, but also a reflection of geopolitical and strategic decisions. The dollar index, DXY, fell approximately 1% this week, marking its worst weekly performance since early June. So, what are the driving forces behind this decline? The first reason is undoubtedly America's tariff policies. Washington is increasing import taxes to protect domestic industries. However, this situation, ironically, is creating inflationary pressure domestically and slowing growth. High inflation and the risk of stagnation are increasing the likelihood of the Fed cutting interest rates. Interest rate cuts, in turn, reduce the dollar's value. However, whether this situation is a conscious strategy is also a matter of debate, where Commerce Secretary Howard Lutnick's remarks that a falling dollar could completely soften tariffs, a signal that this decline could benefit Washington. Yet, President Trump's statement that he would never allow the dollar to fall indicates a divergence of opinion within the administration. Central bank decisions and market expectations. Now let's delve into central bank decisions and market expectations. Upcoming central bank meetings will determine the dollar's fate. Both the U.S. Federal Reserve, Fed, and the Bank of Japan, BOJ, will announce critical decisions. While no sudden change in interest rates is expected, the tone of their statements could change everything. Will they signal interest rate cuts or maintain a more patient stance? This uncertainty could cause trillions of dollars in global capital to shift. The sudden rise in the Japanese yen, in particular, stands out. The yen gained 1% this week, marking its best performance since May. The main reason for this is Japan's new trade agreement with the U.S., which reduces automobile import tariffs to 15%. Markets believe this agreement could convince the BOJ to raise interest rates, and many economists also expect an interest rate hike by year-end. On the other hand, the European Central Bank, ECB, kept interest rates at 2%, pausing its long period of monetary easing. This decision, combined with the weakening dollar, has kept the euro hovering around 1.17 against the dollar, and the euro has gained over 13% since the beginning of the year. Another factor contributing to the dollar's decline is the strained relationship between President Trump and Fed Chair Jerome Powell. On July 24th, Trump's visit to the Fed to criticize Powell and call for lower interest rates did not significantly impact markets. It appears that markets are reacting less to Trump's outbursts, viewing them as a spectacular show. Powell is expected to maintain his data-driven approach and flexibility regarding interest rate cuts. The Fed's decision to keep its benchmark interest rate steady between 4.25% and 4.50% is consistent with market expectations. Loss of confidence or a strategic move? The dollar's decline raises a much deeper question. Are we experiencing a loss of global confidence? Since Trump took office for his second term, the dollar has depreciated by 10%. Some believe this is an indication of eroding trust in U.S. global leadership. JP Morgan CEO Jamie Dimon's warning, if people decide the US dollar is not a safe place, that becomes a problem, reinforces this concern. However, not everyone agrees. Some institutions like SMBC Group argue that fears of a long-term dollar decline are exaggerated. Although speculative investors are in a bear market, real capital flows are still supporting US assets. Apollo Global Management believes that demand for the US dollar and bonds will return once trade tensions subside. Even within Trump's own team, there are differing views. Figures like economist Stephen Mine argue that the dollar has been consistently overvalued and needs a correction to support U.S. tariffs. Treasury Secretary Scott Bessent, on the other hand, states that the recent movements are normal and no cause for concern. Where are we headed? The dollar's current dramatic decline could be a reaction to short-term policy uncertainty and shifting expectations. However, I believe this is a reflection of a much more complex global recalibration, shaped by trade policies, central bank decisions, political friction, and investor sentiment. The future will depend not only on interest rates or tariffs, but also on how the US defines its strategy in the global economy. Remember, we live in a world where trust is everything, and currencies move with every word from a central banker or president. What do you think? Share your thoughts in the comments. Your opinions are very valuable to us. If you enjoyed this analysis, don't forget to like, subscribe, and share. Tomorrow, I'll be back with an even bigger analysis. Goodbye for now.